Morning, Steve Ray in Chicago with the morning grain comments. Markets are lower overnight. Beans are down about 12, corn down 3, and wheat's down about 7. I think in the headlines, first thing you see is that Chinese futures, beans and meal, were lower. Concerned about the swine flu outbreak there could lower the demand for feed. And secondly, still no resolution to the U.S. and China trade issues, and as long as that is there, China probably won't buy beans from the United States. So you had some people talking about that lack of export demand dropping November soybeans below $8 as we get closer to harvest. Over the corn, I think it's still a battle of the pro-farmer verifying that the corn yields are there versus the fact that the demand is going to increase and exports could be record high out of the United States. So you got some people thinking that this 350 level on December corn is going to be good support through harvest, and that we have a chance of rallying the market after harvest, with some people thinking that maybe March and May corn might be worth something over $4 down the road. In the wheat market, 6th consecutive day in which wheat prices are lower, first in Europe and then here in the United States. Longs are getting out of their positions, mostly because of the talk that Russia is going to be an aggressive seller of wheat until they run out. And then some people think that the market will rally then to get back to some kind of value to show the drop in world supplies. The problem is that you could see maybe nearby Chicago wheat holding around this 525 area, Kansas City 550, and Minneapolis at $6 through most of 2019. So, and then I think everyone assumes that in 2019 crops will be back to normal, whether it's in Europe, Russia, Brazil, Argentina, and that could cause 2019 prices to work lower. We're also expecting some kind of news today out of Washington of how they're going to distribute the $12 billion to U.S. farmers because of the trade war with China and the drop of soybean prices. Most farmers will get $1.65 for their crop this year, so first of all, they're going to have to sell the crop and prove what their yields are, and then secondly, get a check from the USDA. No news as to what will happen to that money if there's a resolution to the trade issue and the market maybe rallies back. So anyway, we've got lower prices, trend is lower, and we'll just see how harvest unfolds. We've got some rains moving across the northern Midwest that could slow maturation harvest there, but the southern part of the U.S. should be dry. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.